and it's 10 a.m. here in Lagos. Welcome to Business Morning and happy holidays. I'm Ladi Williams.
And I'm Chimeze Obi Iwagu. Good morning and thank you for joining us. Well, the United Nations expects a 5.4% expansion in global economic growth this year due to rapid vaccination rollouts in a few large countries. According to its report on world economic situation and prospects for mid-2021, the UN says robust growth in US and China has improved prospects for a global recovery. Meanwhile, Nigeria's growth is expected to remain subdued at 1.8% this year, linked to high inflation, unemployment, and slow vaccination. The report forecasts that South Africa will expand by 2.8% and Egypt 2.1%, weighed down by slow recovery in global tourism.
And an indigenous firm, UTM Offshore Limited, has signed a preliminary front-end engineering design agreement with Japan Gas Corporation, a leading international engineering design, procurement, and construction firm, to construct a floating liquefied natural gas facility. That's the first of its kind in Nigeria. The company also engaged Kellogg Brown and Roots UK to provide owners engineering services on the project. You take a listen.
Something novel, unconventional, and quite bullish in approach is about to be birthed in the Nigerian oil and gas space. Between these business heads and global brand representatives here in this room and joining virtually, documents will be signed that would impact massively Nigeria's earnings and energy sustainability. UTM Offshore Nigeria, a wholly indigenous company, is set to deliver a floating LNG vessel offshore Nigeria. It's an unconventional project to bring gas in stranded areas, stranded location, to deliver for use.
The world is moving towards clean energy, and we at UTM believe that Nigeria has to be part of the world. And we believe that the world is a global community, and that's the reason why we decided to embark on this project.
Tremendous progress has been made, we are told. So from when the project was conceived, identification of the need to do it, canvassing for more than 70 oil and gas fields in Nigeria, which have been reviewed, filtered, and established for viable fields that can be utilized, to the finding of off-takers for the gas to be produced, all is now set to sign agreements with Japan Gas Company for the preliminary front-end engineering design contract. Also, UTM has engaged Kellogg Brown and Roots KBR UK to provide owners engineering services on the project.
What we've done with JGC and KBR is to engage in a quest to determine the operating parameters, the CapEx estimate for the project. So if you get this right and you follow through with still the global brands that we're working with, then you are not likely to run into trouble.
I have so much gas sitting offshore doing nothing. So when we start this process and we start getting this gas out, it's going to support the country in terms of foreign earnings. It's going to create so much employment for Nigerians. It's going to also reduce emission, which is most importantly the environmental issue.
When fully completed, the floating LNG will have an LNG production capacity of 1.2 million metric tons per annum, turret and mooring system, gas pre-treatment modules, LNG production modules, living quarters, self-contained power generation, and utilities, as well as capacity for LNG storage and floating.
We're very excited and we're very keen to back projects like this.
The partners and critical stakeholders that are supporting the FLNG project include Afri-Exim Bank, NAPIMS, NMPC, Templars, Vitol, and Yahaska Energy Services.
Well, the Nigeria Sovereign Investment Authority on Tuesday announced its audited results for 2020 financial year, reflecting a strong financial performance and consistent implementation of strategic infrastructure investment programs for the year. The manager of Nigeria's Sovereign Wealth Fund recorded a 343% growth in total comprehensive income to 160.06 billion naira in 2020, as against 36.15 billion naira the previous year. Well, we have the Managing Director and Chief Executive Officer of NSIA, Mr. Uche Orji, to talk more on all of this. Thank you very much for joining us, Mr. Orji.
Thank you for having me. Good morning.
Well, for the benefit of our listeners, let's begin by understanding the major functions of NSIA and how it benefits Nigerians.
Well, thank you. The NSIA was set up to manage revenues that are in excess of the budget from the sale of hydrocarbon. So if there's a budget and you exceed that budget, the idea was to put funds in the NSIA for management. And what are these funds for? First, they are for future generations of Nigerians, to create a savings base for future generations of Nigerians. The second is to provide stabilization support in times of economic need. And then the third is to invest in enhancing Nigeria's infrastructure. So as a consequence, the NSIA manages its assets in three key funds. The first is the Future Generations Fund, the second is the Stabilization Fund, and the third is the Nigeria Infrastructure Fund. The first two funds tend to invest mostly in international markets. So the Future Generations Fund invests in everything from international equities, private equity, venture capital, hedge funds, other diversifiers, fixed income instruments. These are all things that we invest in. The Stabilization Fund does only invest in investment-grade fixed income instruments, which are short tenures, short-dated, because we should be able to provide funds to the government at very short notice. The third, which is the Nigeria Infrastructure Fund, invests in Nigeria infrastructure projects across the country. And here we have, at the moment, 6 key areas of focus. The first is healthcare, the second is agriculture, the third is power, the fourth is gas industrialization, the fifth is what we call financial markets infrastructure. And of late, we have been making some investments in innovation. So we have now digital technology and digital innovation as an area of focus for the NSIA. So these are the areas that we are currently invested in. And when we describe focus areas, these are areas where we sponsor projects, develop projects, and can invest. Our interest is not just restricted to these 6 areas. We also look at other areas where we don't have to sponsor. Yes.
Yeah, Mr. Oji, so you released your 2020 earnings report, posting some impressive results despite the COVID-19 challenges. What were the key drivers here?
Right. Thank you very much. I think the first thing is the international markets where we invested in. If you notice, in spite of the COVID pandemic, most of the international equity markets, particularly United States, did very, very well. The S&P 500 was up almost 15% last year in the United States. And that didn't come to us as a surprise. And this was something we noticed very early on, and therefore we went a little bit more aggressively than we had done in previous years by investing in international markets. We also had very strong returns out of venture capital and private equity, which are areas that we've also been very active, but we went a little bit more aggressively into these areas. And then also we had refreshed a lot of our hedge fund managers and added new ones. Many of them all delivered. Almost every single asset class did well, apart from 1 or 2 that were particularly exposed to pandemic, like the aviation sector, aircraft leasing, those kind of businesses didn't do well for us, but the rest actually did well. And so the international markets was the real source. And so most of that is reflected in the returns you saw in the Future Generations Fund and the Stabilization Fund. The Infrastructure Fund did okay, but I think those ones tend to be long-term, and that's not really largely where we make our money from. We make our money mostly from these other securities type investments. The second area that we saw make an impact for us is foreign currency positions. Right, so we have some swap positions, and we have exposures in pound sterling, in dollars, and in yen, and we try to hedge some of those positions. So the smallest swaps that we entered into to hedge those positions are also part of what helped us deliver strong returns. So the impact of the valuation of the naira relative to our positions gave us 51 billion naira on its own. So if you took that out, the core earnings, excluding the valuations, was about 108 billion naira, but most of that coming from our securities investments, particularly in the international markets.
So why did you modify your asset allocation strategy under the Future Generations Fund to include venture capital?
Yes. First of all, to the credit of my colleagues and I think that worked very well. In dollar terms, just venture capital gave us about almost 30% in dollar terms returns. And in naira terms, much higher, because if you now factor in the impact of devaluation, it's even higher. We did that for two reasons. The first is we believe that if you look at what's happening in the world today, in life sciences and technology, in agriculture technology, in industrial tech, there's just so much by way of innovation coming around. And we had been looking at venture as an area of investing, but we wanted to have the right structures in place to manage the risk associated with that. So we felt that this was the right time to get involved in that. That's number one. And so it was a matter of timing, seasoning, and making sure the organization is prepared to handle it. So last year was the first, actually from end of 2019, we started to make some commitments, but 2020 was when we actually went in full-time into investing in this area. Secondly, we are also now using that as a way to also reflect on innovation in Nigeria. So what you're going to see in 2021 at the NSIA is an active direct investment in innovation in Nigeria. So you're going to find us in technology, in agri-tech, in biotech, in pharma, in many other areas, because I believe that this is truly one way for the world to grow. It is all about innovation, in my opinion, and I think in some ways that the NSIA, after many years of looking at this sector, is now well positioned to get involved in it.
All right. How has investments in healthcare affected the domestic healthcare system, particularly as it relates to the non-communicable diseases? Are you planning to broaden your investment in that space?
Yes. That's a very good question. Thank you for that. Yes, healthcare has been a very important area for us. I mentioned as one of the key areas of focus. And for healthcare, we started out with our strategy is threefold. The first is we're investing in outpatient centers like a cancer center, diagnostics centers. The second is we are now making investments, and you'll see us break ground and start a big project in terms of multi-specialty hospitals. We've made some direct and some indirect investments, and if you look at, there's a Evercare hospital in Lagos. We're an indirect investor because we invested in a fund that invested in that. But we are now going to make direct investments with a big project that we're coming out with here in Abuja, which is a Center for Advanced Medicine. We've already started site clearing. We're going to break ground this year on that project, and hopefully we should be able to finish and commission it next year. The third part of our investment strategy is in pharmaceuticals. This is an area that, for me, was an eye-opener during the COVID era. I think COVID, in many ways, for me, showed me the limits of trade. Pharmaceuticals was one of the big victims. India is the biggest manufacturer of generics. China manufactures the APIs needed to make medicines. And during COVID, these places shut down. So drugs were running out. So we realized that this is a strategic area of importance and we must invest in it. So what we've done is we've entered into an agreement a year ago, actually almost 2 years ago now, but we've accelerated that work with University College London Consults to design a strategy. And that work is almost completed. And we're going to start making direct investments in pharmaceuticals. So it is outpatient centers, diagnostics, it is multi-specialty hospitals, and it is pharmaceuticals. That's a three-pronged strategy for this. We're going to be big in healthcare over the next year, 2 years. The first centers we commissioned, which were in Lagos, at Luth, the cancer center, is running very well. We also have a center in Kano and Umuahia, where we're doing 24/7 diagnostics and radiology. Those are also running very well. In the last year alone, we've treated over 40,000 patients across the three centers, and we're looking to roll out 20 new such centers in the medium term.
Yeah. So your road projects are progressing based on your reports. What is the update on the three major PIDF projects? Do you foresee challenges with the projects timeless? And what is the update, really? And I know you did announce a Sukuk, a Sukuk bond or something.
It's a plan
for
this
Sukuk,
year. Yes.
Yeah.
Okay, so let me deal with those, right? So the Presidential Infrastructure Development Fund, by the way, those assets are not consolidated in the results we announced. They are separate. We're managing them for the president. These are funds that are dedicated to addressing three major legacy projects: Lagos-Ibadan Expressway, Second Niger Bridge, and Abuja-Kano Highway, right? And we started these projects in 2018 with the objective to finishing them anywhere from 2022 into 2023. let me give you a quick update. Lagos-Ibadan Expressway, and I know some people are still struggling with that, but you can also attest to the fact that a lot of progress has been made. We are over 60% completed, I think 63% completed on Lagos-Ibadan Expressway. I believe we should be able to complete that project by the end of 2022. Second Niger Bridge, we are at the end of the year, we're about 53% completed. But there are 3 phases to Second Niger Bridge. The first phase, which is a phase the NSIA took original responsibility for, is a 10.97 kilometer road and bridge construction. I believe we'll finish that sometime in the 3rd quarter or 4th quarter of 2022, that first phase. In fact, I'm hoping that by the end of this year, we will have completed the decking of the bridge. So by the end of this year, I'm hopeful that we can see a bridge. Now, the approach roads still needs work, and that's ongoing. So by next year, you'll see that section completed. Now, there's an update. The Second Niger Bridge project is a very big project. It's about 45 kilometers in length. NSI's original section is 10.97. The Ministry of Works was supposed to do the access roads. But this year, those access roads were now transferred to the NSIA for various reasons. The ministry couldn't move with it. So it's been transferred. Some work has now started. I'll give an update once we start that aspect of the access road to be completed. So the original scope we had at the NSIA will be completed by next year. The access road, I'll give you an update, and I think between ourselves and the Ministry of Works, an update will be provided. Okay. Abuja-Kano Road, there was also a change to the scope. So the original scope will be done next year. The new scope, again, Ministry of Works will give you an update. So all of these projects are moving at pace. Let me emphasize, these are going to be commercial economic corridors. There'll be toll roads, there'll be trailer parks, there'll be all sorts of things that are going to be added to those roads to make sure that they earn a revenue. You asked me about Sukuk. There's a plan to raise the Sukuk fund at some point to use to augment the funding. Just watch this space. We're just talking about it at this stage, but we're hoping to launch that Sukuk sometime next year and other types of fundraising activities for the roads.
All right, Mr. Orji, we'll be tracking those as they come up. But what's your outlook for the economy for 2021? You know, what are your plans, you know, for the NSIA?
Well, so let's start with the global economy. I mean, I was watching your show, and the United Nations had a projection for next year, for this year, in terms of 5.4% economic growth. For Nigeria, they said 1.8. Here's my view. I think global economy will grow. Vaccination is proceeding at pace. We're going to see economies start to reopen gradually, and I think that that is a good thing. However, at NSI, and this is how we have positioned ourselves, I believe that the drivers of growth in 2020 will be very different from the drivers of growth in 2021. Last year, the performance in the capital markets was largely driven by technology stocks. This year, I think the performance will be driven by a broad economic expansion. I actually believe that technology will underperform this year versus last year. And that's just because of just law of large numbers. We've had phenomenal growth in tech. It's very hard for that to be repeated. But more importantly, as other parts of the economy expands and reopens, industrial chemicals, industrial sectors, aviation, travel, leisure, these are all sectors that have been closed because of the COVID pandemic. I expect them to open. And once they open, you're going to see other areas of performance in the economy. So broadly, I think it'll be a good year, but I also think that the mix will be a little bit different. Tech will not, in my opinion, do as well. Secondly, watch out for inflation. There's been too much money pumped into the system by global central banks. At some point, I just don't think it's difficult for that to end up leading to some kind of rise in inflation and interest rates, and that will possibly have a negative knock-on effect on fixed income instruments. So in terms of how we have positioned ourselves in our international investments, these are the things we're bearing in mind. I'm holding on to the fact that I think the markets will be better. And one last thing, past performance is not a reflection of future performance. I don't think that the strong performance we saw in 2020 will be repeated in 2021. It's just different. And if it does, that's great. But my sense is that it's not. So I would like to be able to make that comment very clear, that last year was a great year, one-off year, but I don't know that it's going to be repeated in 2021. That is how we've positioned ourselves. For the NSIA, the areas I think you're going to watch out for that I feel confident will be very active are the following. One is healthcare. Rolling out some of these healthcare projects and expanding our footprint will be number one for us. Number two, the road projects. I've talked about the likelihood of a Sukuk fund, but operationalizing these roads, completing the concession agreements for these roads, and the funding plan for the roads are very important, because I expect them to now start turning into specific companies. These are going to be toll roads, and I keep emphasizing it, but they'll be run as businesses. The third area for the NSIA that will be very active is innovation. We're going to be very active in data networking and software and services. We're going to be very active in pharmaceuticals and biotech. So those are the things I expect us to be focused on in 2021.
Well, thank you very much, Mr. Orji, for sharing your plans with us on the show today. We wish you all the best, and of course, we wish the economy all the best. Thank you for your time today.
Thank you, too.
All right, we'll take a break, and when we come back, FX Commodities Market update is next.
And now for AFEX Commodities Update. Volume and value traded on the AFEX Commodities Market in the week of May 4th and till 10th were up 86% and 71.31% apiece. However, while AFEX Commodities Index went up 0.48%, the export index was flat. For details now, let's talk to Michael Martin, Portfolio Manager at AFEX. Hello, Michael.
Hi, Ladi. Good morning. Thank you for having me once again.
Good morning. Thank you for joining us. Well, run us through the week's activities.
Thank you, Ladi. So over the course of the week on the commodities exchange, we saw the total value of transactions traded on the exchange go up by 71.31% from around 1.22 billion naira to close the trading week at 2.09 billion naira. The total number of contracts traded on the exchange also went up by 86.06% from around 70,332 contracts to close the week at 130,858 contracts. The total number of deals, however, fell by 31.34% from around 35 deals to 24 deals. We also saw a bit of green on the AFEX Commodities Index, which went up by 0.48% from 381.89 points to 383.74 points. The AFEX Export Index, which is the AEI, however, remained flat in the week under review, staying at 146.57 points. As regards the volume of contracts traded on the exchange in the week under consideration, we only saw significant market activity for maize as a commodity, going up from 70,001 contracts to close the week at 130,843 contracts. The only other commodity that traded up ever so slightly was soybean, which went from 0 contracts in the previous week to 15 contracts in the week under consideration. Every other commodity traded little to no volume in the week under consideration. As regards price, we only saw movement in 2 major commodities, and for the top gainer, we saw a 1.05% gain in the contract price of maize, gaining 200 naira to close the trading week at 19,200 naira per contract. And the top and only loser for commodities in the week under consideration was soybean, which fell by 0.38%, losing 115 naira in the contract value to close the trading week at 30,635 naira per contract. All other commodities from paddy rice, sorghum, ginger, cocoa, sesame, and cashew all remained unchanged in the week on the review. And lastly, we have the fair trade exchange-traded commodity, which still, of course, remained unchanged in the week on the review, remaining at 14,008 naira per contract. And as we always say, if you want to know more about commodities, you can go to our website, which is www.afexnigeria.com. And if you want to get started trading commodities, you can download our COMEX app on Android and iOS.
All right, Michael, we are currently in the Ramadan period. What are the effects of the Ramadan period on commodity prices?
So some of the effects of the Ramadan period can be very flat. So on the exchange, we haven't seen any sort of significant market activity as you would expect. So for the Ramadan period, you tend to see activity with paddy rice as a commodity on the exchange, but this year we haven't seen that many activity on the exchange with regards to paddy rice. So yes, you can sort of reasonably estimate that this year's Ramadan hasn't had any sort of significant effect on the price of commodities on the exchange. So yes, the effect can be flat and was flat this year.
All right, what are some of the wet season input disbursements and its effects on commodity prices?
Okay, so first off, so for some people that don't know what the wet season input disbursement is, and that's usually the time period where we're distributing fertilizers, herbicides, and all other inputs to smallholder farmers to allow them to use when they want to start cultivating. And so some of the effects that we have seen play out in recent time, and maybe also this year, is that tends to have a deflationary effect on commodity prices. And so what very often, or one of the phenomena that we've sort of observed in the commodities market is we've seen smallholder farmers in a bid to buy the inputs that we are distributing, right? They would essentially go and sell off the excess volume that they have cultivated in a bid to make up for the commercial value of the inputs that they actually want to buy. So we see them selling off that volume and then coming to buy those inputs So yes, wet season input disbursement can have a deflationary effect on commodities prices.
Yeah, so let's look at storage. You guys often talk about storage as a service. What does that mean for the participants on the value chain?
So one of the major challenges that has bedeviled the agricultural value chain and maybe the commodities ecosystem in general is the availability of storage facilities, right? And this sort of affects every single player within the agricultural value chain. For us at Afex Commodities Exchange, we have more than 70 warehouses with a storage capacity of more than 150,000 metric ton. And what that means for us as an exchange is that we can leverage that storage infrastructure to provide storage itself, right, as a service to every single player in the agricultural value chain, whether that's in terms of the smallholder farmer who doesn't want to sell off his entire volume and then brings that volume to our warehouse to store and keep, or whether that's also in terms of the processor who doesn't have the enough storage capacity to store the entire volume that he would need for the entire year. He can also store that volume with us as an exchange. So for us as an exchange, we currently have the storage infrastructure whereby we can guarantee to a reasonable extent the quality, quantity of commodities that are stored at our warehouses because, of course, they are stored in a quality-controlled environment. And, of course, that allows us to also facilitate transactions between the sellers of commodities, which are the smallholder farmers, and also the buyers of commodities, which are expected. This is what it means to us as an exchange in being able to provide storage as a service to players in the agricultural value chain.
All right, Michael, but what benefits do producers gain with regards to having this storage as a service, and how does this curb food wastage?
So, to be honest, there are a lot of benefits, particularly to producers, and that would be smallholder farmers. There are a lot of benefits that storage gives to smallholder farmers when they come to store on the exchange. So take, for example, when a smallholder farmer cultivates a particular commodity, immediately at harvest, is immediately faced with a conundrum. So the question is, do I sell off my entire volume, do I sell off my entire cultivation now, or do I store and wait for a particular period when I expect that the prices are going to be higher so that I can gain a bit of the commercial value of the commodity that I have cultivated? If he doesn't have storage facilities, he has to sell off that entire volume at harvest. So let's take, for example, if maize is 100,000 metric tons at harvest, he has to sell off that entire volume at harvest and then go and sort out how he's going to survive for the rest of the year. But if he has access to storage to a storage facility, it then becomes incumbent on him to store a particular percentage of that volume and then hope to sell it off when the prices are higher. So the major benefit to producers would be the ability to capture a portion of the true commercial value of the commodity that he has cultivated. And when you think about that in terms of food wastage or storage being able to curb food wastage, so think about just the tomato value chain alone. Post-harvest losses account for almost 45% of the value in the tomato value chain alone, right? And even for grain production in the country, some surveys have estimated that post-harvest losses can be as high as 20 to 30%, right? Of some conservative estimates would say between 5 and 20%, but still a significant amount, right? Last year alone, because of COVID-19 and a bit of the structural issues that we had in the agricultural value chain, the losses were estimated to be as high as $9 billion. I mean, thank goodness that we haven't had any sort of significant macroeconomic or weather condition adversely affecting the agricultural value chain or the commodities ecosystem. We would essentially be in trouble as a nation. So storage as a service, allowing us to curb food wastage, is important for the entire value chain, both in terms of, both from a financial standpoint and also from a food security standpoint as a nation.
So what are the key opportunities that AFEX has made available as an effective storage services?
So one of the things that we've been able to do as an exchange is the ability to establish warehouse infrastructure, right, at designated locations that are close to warehouse, that are close to smallholder farmers, rather, facilitating last mile interaction with the smallholder farmers. And what that means is that we're able to reach out to smallholder farmers, regardless of where they're located, even if they are in remote areas, right? Another thing that allows us to do is it allows us to provide e-warehouse receipt financing to smallholder farmers who need them. Lastly, and this speaks to processors, anyways. It allows us to provide backing for whatever commercial paper that they want to list in terms of collateral management. So those are some of the services that we've been able to provide as an exchange to different players in the agricultural value chain.
All right, talking about services, now farmers can use their stored produce as collateral to access credit through warehouse receipts. How exactly does the process work?
Okay. So when a farmer cultivates, right, he essentially has the ability to bring that commodity to our warehouse, right? Once he brings that commodity to the warehouse, the commodity is weighed, graded, scaled, and then, of course, the quantity and quality parameters of that particular deposit are measured, right? Once that happens and the commodities are stored with the exchange issues him what is called an e-warehouse receipt, an electronic warehouse receipt. Now, that electronic warehouse receipt is essentially the equivalent of a title deed that he can then take to the bank to access as collateral to access a loan, right? So essentially, if you're trying to borrow money from a bank and you want to use your land as collateral, you don't essentially take your land to the bank and use that as collateral. What you take is a title deed, correct? So for us in the commodities ecosystem, the e-warehouse receipt is the equivalent of that title deed that the smallholder farmer can take to the bank or any other financial institution, and the bank recognizes that e-warehouse receipt as collateral for whatever loan, right, that he wants to access from that particular financial institution, right? And for this to work, right, there are a lot of there's some frameworks that need to be in place. The first off would be the legal and regulatory framework. The second would be the insurance framework guaranteeing the quality and quantity. Guaranteeing the quality and quantity of the commodities that have been deposited in the warehouse. Thirdly would be the financial institution framework, meaning that banks and other financial institutions must recognize that e-warehouse receipt as a valid document for collateral to access finance. And maybe lastly, and of course not least importantly, would be the education of smallholder farmers so that they know that they have access to this kind of service and they can access loans and financing from financial institutions.
So what are we likely to see in your market after this Ramadan holiday?
I mean, I would expect the commodities market to continue the trend that they always have. So we've spoken at length about how sometimes after you have a bullish period of time, you sometimes see a period of consolidation, which we have been seeing for the past couple of months and past couple of weeks. And then from there on in, you'd expect prices to trend continuously upward. So yes, expectedly, we expect that price should continue upwards in the commodities market.
All right, thank you very much, Michael, for your time today, and happy holiday. We'll take a moment now.
Happy.
All right, let's check with the numbers with Anita Edit. Well, Anita, the market continued in the green on Tuesday.
Yes, Jimmy, good morning. Thank you. So we've been able to see the market sustain that rebound, which it started on Friday last week. So, and before today there's a public holiday, so the market is actually closed. So, but before that, we were able to gain about 96 billion naira within the last two trading sessions beginning on Monday. So now we saw the all-share index sustain the uptrend. Yesterday was up by 0.18%, and that's all thanks to the 1.61% gain on the shares of Dangote Cement, although it was also a positive margin of 20 gainers against 17 losers. But that gain, that more than 1% gain from Dangote Cement. Of course, that's the market's most capitalized stock. So it was able to lift the market. It was a major contributor to the uptick on the market. And then, of course, when you take a look at the volume of transactions, it was down by 8.5% in contrast to what we had on Monday. On Monday, we had more than 300 million units of shares being traded, but yesterday was slightly down. So then the volume of shares was down. The number of deals was also down, but the value was up. So we'll be joining Mohammed Kaide, the head of securities dealings at APT Securities and Funds, to tell us more about the market. Thank you for joining us, Mr. Mohammed Kaide.
Thank you. I'm happy to be here with you.
Okay, sir. So now the market has been able to sustain the uptrend, although we started the month of May negative, but the second week has been able to sustain positive trend before the holiday. So what is driving this renewed interest for stocks?
Yes, I have about two things I believe that is responsible for what's happening in the market. I think the first one is about the devaluation that the government did about at the end of March. So you see the devaluation. When the devaluation happens like that, you realize that the investor that has seen it, have predicted it earlier, they wait and see what the government likely to do. So when they have seen that finally government has come to react in that manner, they will quickly rush the market and start today. You can see the value traded in the market is going up, and this shows that there are interests that are coming into the market. That is one. Two, the second issue that we have is that historically, or the trend that the market has formed for a while, is that we used to have first quarter to end in the negative, but second quarter always end in the positive territory. So, and the trend has started now. So I believe that the trend in the market is because of new interest, and also those that are focused on the second quarter result that's going to be released by June. So the investor always forward-looking before other people react to it. So I think the stock picks that the investor has done and looking forward to what they expect at the end of June for the result of a half-year result. So that's what I think is pushing the market to the level we have now.
Okay, so now with the current level that we are, and we have just one more trading day within the week after tomorrow. So how do you see the market reopening and ending the week?
What I expect that you see the trend has started since on Friday. I believe that it happened on Monday. It happened on Monday and also yesterday. So the trend has started as far as I'm concerned. So I believe that at the end of this week, we are going to have a positive trend. So the positive trend needs to continue on Friday. I believe the market will close on the green in this week.
Okay, so when you take a look at the shares of Dangote Cement, it went down by some margin on Monday and then made a rebound in Tuesday's trading session. So what are some of the key factors to look out for in Dangote Cement, especially as investors are beginning to renew their interest for that bellwether stock?
Yes, actually, you expect the market stock to behave in any manner, in any manner in the market. Though despite the fact that we have trend in the market, we need to look at some certain things around a particular stock. Like in the case of Dangote Cement, you see that their share buyback is still in the pipeline. So they've not done with the share buyback. So we should expect that any time that you see that the stock goes down for about a particular percent, then they have to come out to make sure that they also buy it and then move it up to the level they want it to maintain, and the level that the stock's supposed to be traded on the exchange.
Okay, thank you, Mohammed Kaide. Pleasure having you. That's Mohammed Kaide, the head of security dealings at APT Securities and Funds. So, Chimi, you can see the market is beginning to take, maintain. The bulls is actually making an aggressive comeback, from its rival, the bear, which had, tried to take the shine off it last week. So,
well, let's just
still
hope
optimistic.
that positive sentiment there will continue when the market resumes on Friday. I share the same optimism with Mohammed, but let's just keep our hope alive and continue to hope for the best for that market. Thank you, Anita. All right, we take another quick break, and when we come back, we do an opening call to London. All right, let's do our London morning calls now to Juliana. Good morning, Juliana. Well, the GDP 1.5% decline. Well, this is not as bad as the 1.7% drop forecast by City economists. More encouragingly, the economy grew by 2.1% in March, the most since August. There's a light at the end of the tunnel, after all.
Yeah, absolutely. There is a light at the end of the tunnel, Chimaze. I definitely think the Chancellor Rishi Sunak has dodged a bullet with these numbers, showing that there has been a 1.5% contraction in the first quarter of this year. No surprises, really, because we're all in a pretty tough lockdown with restrictions in January, February and March. We had a 2.5% contraction in the beginning of the year. And then, of course, we had that 0.9% growth in February, and now there's 2.1% growth in March. The Chancellor Rishi Sunak, he's been doing the rounds on Business News this morning, pretty pleased with himself, especially if you have a look at employment data, which is much lower than our counterparts in the US and France, which does mean people are either on furlough or have maintained a job. And that, of course, contributes to spending and keeping the economy ticking again. At the moment, UK GDP is about 8.7% below pre-pandemic levels. We've got a lot of time to catch up. The International Monetary Fund have predicted the UK GDP to grow to 5.7% this year. Of course, the Bank of England are much more confident. They expect a 7.25% growth. And of course, we are going to be opening up more of the economy on Monday. So pretty good news within the square mile today.
What sectors outperformed and which of them lagged and why?
There was growth in all sectors, really. I think what a lot of economists are attributing to the major growth is we've had a couple of significant days, one of them being in February when the children went back to school. That was a massive change in tone. Lots of parents, including myself, had to go and spend. Lots of children, of course, in fact, millions of children were in front of a computer. Once they were back in school, you had to spend on buying and upgrading their uniforms. There's also Mother's Day, Valentine's Day. Yes, here in Britain, a lot of people spend a lot of money on days such as that. And of course, because lots of businesses have had to prepare for more COVID restrictions as staff started coming back into their workplace, we did see a rise in construction and in manufacturing. Services, in the first quarter grew by about 1.9%, and that's because a lot of people think that here in Britain we have started getting used to living under a COVID lockdown, which does mean, of course, that we're spending more. And to top it off, retail sales, even before the opening of non-essential retail on the 12th of April, retail sales in March rebounded pretty swiftly.
Well, it's data all the way today. Trade figures also out, showing UK's trade deficit worsened to £2 billion in March from £900 million in February. What sound bites are you getting on this?
Well, not much. Of course, lots of focus really mainly on UK GDP. It's always about that. But yeah, the trade deficit, not great. We are obviously exporting more than we're importing. But I think really what everybody is focused on is the EU, because that's been the biggest bone of contention. So much backlogs and bureaucracy that we were seeing in the beginning of the year. It has eased. I believe exporting out of the EU into Britain is getting getting a little bit better, but I suspect once we are fully out of lockdown, people are starting to understand terms and conditions of post-Brexit rules. We will start seeing more exports leaving the continent for mainland Britain. And of course, we've got so many new trade deals that have been sparked by the Trade Secretary Liz Truss over the past couple of weeks, most notably with India. So yes, still not great, but not as bad as could be. And we're expecting the trade deficit to decrease in the coming months.
All right, thank you very much, Juliana. We hope to get more update from you later in the day.
Thank you.
And let's look at the crypto market. Well, laddie Elon Musk again talking about accepting Dogecoin for Tesla.
Yeah.
And that, of course, boom, Dogecoin
Exactly.
up.
He did a poll on his Twitter, and everybody wants him to actually list Doge as a mode of payment for Tesla. But, you know, he's the Doge father. He's not letting Doge go, even though the price
The other time
yesterday.
it was a hustle. That's what it was.
It was a hustle on SNL, but now he's looking to actually use it as a mode of payment for Tesla, for a car. That's quite incredible. I don't understand his love for Doge, but yeah, that's what he likes. Well, market cap, $2.51 trillion, up about 5.16%. 24-hour volume, down about 17.36. Bitcoin dominance at 42.21, down 0.66%. That's the price of Bitcoin at 8 a.m. this morning, $57,190, up 5%. 24-hour volume, $62.40 billion traded. Price of Ethereum, the king of altcoins, hitting a new high there, up 9.31%, $53.85 billion traded this morning on Ethereum. Let's look at the top alts by market cap here. BNB up about 3%, up $674. Cardano up 7.57%. And Doge having that recovery there, up at 50 cents, up 6.44%. XRP, $1.48, up about 3.93%. And my coin to watch still remains Digibyte. Digibyte, 13 cents this morning, market cap $2.93 billion. Let's look at the chart there. See, Digibyte still in bullish territory on the one-day chart. It's still a buy for the moving average. Let's talk to Gold Odussin, digital market analyst. Hello, Gold. Good morning.
Hi, good morning, Lati.
Good morning. Thank you for joining us. Well, it seems high-risk coins are the ones taking the shine, you know, at this time, with Shiba Inu going about 30,000% up. Well, you have altcoins that have real-world use cases not doing very well. What's happening?
Okay, I'll say these meme tokens are actually created without real-time values, and they tend to give people sudden funds that are not expected, so to say. When you buy a token with $20 and before you know, for example, Shiba, SafeMoon, and the rest, it just pumps and gives you serious funds that you never expected. Without any technical analysis, no fundamental analysis, people just cash out every day. But if you check, you see that these coins might not stand the test of time compared to projects that have real-time values and good use cases. So I would say projects that have real-time values are here to stay, and they'll stand the test of time. But all these meme tokens, they'll just flow with the bubble, and someday we might not hear about them anymore. Yeah,
and interestingly, Shiba got listed on Binance. Does it look like Shiba would be one to stand the test of time?
Well, we cannot really say anything is possible in this space, because I was even surprised to see Shiba listed on Binance. So anything is possible, actually.
All right, Gold. Thank you so much for your time on the program. Enjoy your day. All right, let's take a look at our Digibyte chart there. We see technicals are showing it's in the buy zone right now on the one-day chart. We have the RSI. The RSI is still in neutral zone, so you might be keep an eye on this RSI. So when it gets overbought, you know if you're going to take profit or not. The MACD is still, you know, in bullish territory. It might cross and take the price higher. So the prices to watch is this 300 sat. If it breaks there, might have a good profit in your hands there. The 20-day exponential moving average is also in the buy zone, so we should keep an eye on that one. Top 5 gainers, EOS. EOS up 44.08%. That's about 98% up in 30 days. YFI going hard there, 33% up. Matic, 32% up. Sushi Swap, 24% up. And Uniswap up 19%. Let's look at top 5 losers. We have ICP, recently listed on CoinMarketCap, down 25%. Shiba Inu, the supposed Doge killer, down 18%. Incredible. TEL, down 13%. Bitcoin Diamond. So all these here were top movers last week, and they're all pulling back at the moment. So, Chimi, that's how the market is looking today.
That tells you that what Gold just said is actually correct. So you don't have to get carried away with that sudden rise we saw in that Shiba Inu. I mean, you were talking about it, and then if you haven't bought that coin, you would have said, oh, if I had known, I would have invested in that. But
fear of missing out.
It's not all coins that you see that you have to deal with. And that is why we keep saying, if you must play in this market, you just have to be very careful and seek financial advice from professionals.
Yeah, don't let FOMO get the better of you.
Absolutely. All right, thank you. And of course, this is a holiday, and you talked about, is it Digibyte? Should that be the coin to watch?
Oh, yes, Digibyte is
this holiday.
Yes, I checked the technicals this morning.
I'm waiting to hear when you will talk about ZRX.
Very soon.
Okay, we'll watch out for that. Thank you very much for watching. I'm Chimeze Obi Iwagu.
And I'm Ladi Williams. Happy holidays.